Good evening, everybody. This is Arun Mehra here from Samera. This is one of our regular webinars that we're starting to hold on every few weeks for business ideas for dentists and anyone else who wants to listen in. And tonight I'm joined by Nigel Crossman. Nigel is new to our team. However, Nigel has a lot of experience in this area, which we're going to talk about tonight, which is called financing your business. Nigel, are you there? Just want to check everything's all working.
Yeah, I'm here.
Brilliant. Thanks, Nigel. Well,
can you hear me?
Yeah, we can hear you. Perfect. Thank you. So I just want to introduce Nigel. Nigel's joined our team as the head of commercial finance, and his role within the team of the Samera businesses is to help clients raise finance. Nigel has, I think, 38 years experience. Am I right in saying that, Nigel?
Yeah, I started very young.
Started very young. Okay, all right. So he's 38 years of experience working in banks, and he left recently one of the well-known high street banks, which is very well known and strong in the healthcare sector, as the head of healthcare. So he knows a thing or two about lending to people in the healthcare sector, or just a bit. So he's the one to talk to, and he has a lot of experience in this arena. So what we're going to be talking about tonight, primarily Nigel, will be how to finance your business, whether you're starting up, whether you're looking to acquire another practice, whether you're trying to grow significantly. You will need money, you will need finance. Nigel has plenty of experience of helping all sorts of businesses in doing that, and also then will be able to help you if you're looking to raise finance. So without further ado, I'll let Nigel move on, and I'll be prompting Nigel with questions throughout. In addition, what I'd request you to do, if you do have any questions, please do post your questions online, and I'll try and get Nigel to answer these as we go through the webinar tonight. Okay, so Nigel, why don't you say hello to everybody? And I know I've introduced you, but why don't you do another introduction? Thanks.
Thanks, Aaron. Good evening, everybody. I hope everyone can hear me clearly. And welcome to the Samera Finance Financial How to Raise Finance webinar. As Aaron's already said, he's introduced me really and said how much experience I've got in the banking industry. I'm really happy to join Samera Finance. As most of you will know, they've already got an established dental practice sales arm, and this really is an add-on to that, and then we can help people to put forward the finance to the banks in the right way. So at the end of the day, I'm just going to go through a few main points. I mean, the slides look quite busy, but they are main points, and we'll just chat through it. And please, if you have any questions, just email them into Aaron, and Aaron will prompt them to me during the course of the talk. Okay, Aaron. Next slide, please.
Sure. So got all that covered. Okay. Right. You got that, Nigel?
Not yet. No.
There's a bit of a delay on your side. So preparation for buying your business. Can we help? Have you got that?
Yeah, not at the moment. Right. It's preparation for buying your business.
My fault. My fault. Technology's let me down. Sorry. Let's do this.
You're down, is it? There you go. We're on. I've got full screen.
Go some slides. Why don't we get back? So, previous slide. So, do you want to? You've mentioned that already. We'll crack on to the next slide there.
Yeah. Oh. There you go. Thank you. Right. So, preparation for buying your business, and how can we help? Well, what we found, especially when I was in banking, is that one of the most important things is building a professional team. And the professional team is very, very important to you. And some people don't do this in the right order. You obviously need a good accountant and possibly somebody who understands, in this case, dental or healthcare finance and how your actual business works. You also, when you instruct solicitors to move forward a sale, purchase or an acquisition or an extension of what you're doing, even if you're just buying out a partner, you actually need a lawyer who actually understands the business. So a specialist, in this case dental lawyer, is very, very important. There are several around. They're all very good at what they do. And what we used to find when I was in the bank was that where we didn't use them, it prolonged the sale or purchase. It took a lot longer because they didn't understand sort of how to deal with the CQC. Very important point. I mean, I'm sure everyone knows how difficult it is to deal with the CQC. and to get contracts transferred and that sort of thing, you need people who know how to do that sort of thing. So that's accountants and lawyers, but it's also true of the finance as well. We have a lot of banks who have specialist teams who deal with healthcare. So the issue sometimes, and we found this a few times recently, is that people will go to their bank, they won't speak to someone who's a specialist. They will put forward an application to their credit department, and it will be declined because they've not really understood the business and they haven't put forward the proper information. So building your professional team around you, as you do in your own practice, as you do in your own industry, is very, very important. Okay, Aaron?
Thanks. Yeah. Just one point to note. I think Nigel mentioned this, but I'll echo the same point. I've been involved in various transactions with clients where the lawyers haven't been dentally qualified, but they talk a good story, and in essence, it usually ends up costing a lot more of legal fees for the buyer or the seller because things have just dragged on, and the legal fees just rack up very quickly. So always seek specialists in the relevant area in healthcare finance for healthcare accountants, whether it's us or someone else, and obviously with the lawyers as well. Right. Next slide.
Thanks, Aaron. Right, so these points are fairly self-explanatory. We'll just run through them. I mean, banks and finance companies are very keen to lend to this sector. At the end of the day, healthcare generally is seen as a very good sector, and all banks have good appetite for it. So they do want to lend to it, so it's a question of just approaching them in the right way. The issue that everybody has, and generally when the general public go towards their bank, is that all the banks and finance companies have different policies. Some will lend against goodwill, some will do multiples of EBITDA. EBITDA is the earnings before interest, tax, depreciation and amortization. And some will lend to a maximum sum. So for instance, one bank I know will lend a private dentist a maximum of 300,000, will lend an NHS dentist a maximum of 500,000. Another bank that we deal with will lend against goodwill, and they'll lend 70%. And yet another bank we deal with will lend up to 90% in some occasions. So there are very, very big differences between the banks, but whilst they're all keen to lend to the industry and the sector, they all do it in a very, very different way. As I said previously, a lot of them have specialist healthcare teams. The issue sometimes is finding them. We've got good contacts with most of them, which is good. But sometimes people go to non-specialist managers and it all falls apart, to be quite honest, because they don't understand about CQC. They don't understand about the fact it's going to take probably 5 or 6 months to get the deal completed, and they get the structure of the deal wrong as well. So access to the right people is very, very important. And for you in the industry, one of the issues is time to do all this, because you're quite busy. Your day starts probably at 8 o'clock and probably ends somewhere around 6 or 7 in most days. It's very hard to talk to people during that time because you're with clients. What I've found since joining Samera is that we do a lot of this interaction with clients in the evening, and it's not unusual for me to be speaking to a dentist at 8 o'clock in the evening about the structure of a deal, because that's the time when you're at home. You're a little bit quieter, you've got the time to concentrate on what you can do. So that's all very important. The banks are keen to lend, it's very important to know that, but they all have very, very different policies. Aaron?
Yeah, sure. Carol.
Lovely, thanks. Now obviously with the dental sector, we have NHS, we have private, we have mixed practices. We deal with startups and we deal with purchases, as Aaron said earlier. We also deal with people who already have a practice and wish to buy another one, and we also deal with people who have 4 or 5 practices and wish to buy another one. So that's called in the banking terms a buy and build strategy. So in other words, you're building a group and you're doing it over a period of years. Banks lend mostly in this sector on an unsecured basis. They're happy to lend on an unsecured basis. Like all banks and finance houses,
Nigel,
they do love a little bit of...
Sorry, do you want to explain what unsecured and secured means? Because I think not everyone would understand that.
Yeah.
Can you explain that a little bit further?
I've been in banking far too long, I think.
Sure.
Unsecured means you don't put any security up whatsoever. So there's no charge on your house. There's no charge over life policies or any other assets in that business. The only thing they might ask you for if you trade as a limited company is a guarantee. Now, a secured advance will be secured against a freehold property. In general, that's how they do it, either your own property or an investment property, or indeed the business property. So if you've got a leasehold property where you trade from, that loan would be unsecured, whereas if you have a freehold property, they would expect to take a charge on the business premises. But they wouldn't be looking to take a charge on your own matrimonial home.
Sure. Okay.
Now, generally, the maximum term for these types of loans is 20 years. Now, again, some banks will do this differently. Excuse me. Some banks will give you a 20-year profile. So they will work out what the repayment of your debt is over 20 years. Everybody does that. But some banks will only give you a commitment for 5 years or 10 years. And that means that at the expiry of that 5 or 10 years, you have to go back to that bank and renegotiate the loan. Now, other banks will give you a 20-year profile, but a 20-year at the set, you know exactly what you're going to pay over the 20 years, and you pay it back over 20 years without having to go to the bank again. Now, you can do that on a fixed rate, or you can do it on a variable rate. So a fixed rate is the rate where you don't change the rate over the period. The variable rate means that your rate goes up and down with base rate. Most banks will only go up to 10 years now on fixed rates, and that's mostly due to the issues that banks faced over the past few years with regard to fixed rates. So they will most of them will only go to 10 years. Some will charge you an arrangement fee, some will not. Again, it varies between all the different banks. And many will give you a capital repayment holiday at the outset. Most people don't tend to ask for this because they don't expect it. But what a capital repayment holiday is that you will only pay the interest for a certain period. Now, normally this is only 6 months to a year. But however, that is very important, especially if you're starting up a business, like a squat, or if you're actually taking on a business from somebody else and you're trying to build the business. To give you that first year of lower payments allows you to put a lot more back into the business if you need to do any work on the premises, upgrade the chairs and the cabinetry and that sort of thing. So again, all different banks do different things, and it's a question of knowing these things so you can ask for them. Okay, Aaron?
Yeah, no, I've got a couple of questions for you, Nigel, from just thinking about it. In terms of the arrangement fees, when people don't charge arrangement fees, are we typically then seeing that the interest rate being charged to the client is higher? Do we see that situation usually?
It's interesting. No, it doesn't seem to work like that. It seems to have come from the government's recent aggressive stance towards banks, and banks stopped charging interest rates under what was called the Funding for Lending scheme.
Okay.
They stopped charging arrangement fees. Sorry. Now arrangement fees are coming back in as the banks regain their strength. Okay. So it doesn't seem to affect the rate. It can affect the rate, and there are some banks where they don't. They will quote you without a fee, but you can actually go to them and say, well, what about if I pay a 1% arrangement fee? And that will change the rate, because basically they're looking to get a return over the period of a certain amount. So they will fluctuate the rate slightly if you then pay an arrangement fee.
Sure. And then what about the rates? And obviously, what are the ranges of rates that people can be seeing in the marketplace today? And what is the impact of it? I know there'll be a vast range, but just what you're hearing or seeing in the marketplace currently, just to get an idea.
What we're seeing at the moment in the market is if the deal is fully secured, so if it's a freehold property and you want to put your house up against it and you want to fully secure the debt, then the rate could be as low as 2.6, 2.8 above base rate. Okay. That means the base rate is 0.5 at the moment, so you'd be paying 3.1 or 3.3.
Okay.
If it's an unsecured deal, you're looking around the region of probably 3.25 to 4, okay, depending on how much unsecured debt there is.
Okay. Okay. And in terms, when you say how much, what are you seeing like client-wise? What's the biggest amount of unsecured debt someone could typically get? I know.
Well, this is where
there's no definitive number, I know, but it is possible to borrow quite a lot if you needed to. Correct? Yeah,
it is, because if you're borrowing against goodwill, and the goodwill on your premises is, say, 1.5 million,
Yeah.
then you could borrow 70% of that, or possibly 80%. What you have to understand is if you start to go beyond the norm is 70 to 80%. If you go beyond that, you are probably going to pay a slightly higher interest rate because it's higher risk. So the more they lend you unsecured, the higher the risk. So the interest rate will fluctuate slightly. But we're not talking 1 or 2%. You're talking in great, tenths of percents.
Okay. And in terms of buy and build strategies, okay, if you're trying to, let's say I've got a few practices already, okay, and I want to expand my portfolio and get more practices. What I've seen in the marketplace, a lot of people just kind of get stuck at 3, 4, 5, even 6 practices, okay, and then they can't raise the finance. What should they be doing in that situation? What do they need to start thinking about?
Well, what they need there is to find the bank that will help them on a buy and build strategy. Some banks get very nervous of the amount lent out to one individual or one group of partners. But many banks will allow you, and this is how you can build your business up. So if you've got, say, 3 practices and they're each earning £100,000 a year for you, the banks will allow you to use that 300,000 if there is no borrowing against it to buy the next one. So they will allow you to use that 300,000 to cover your debt servicing costs, how much it costs to repay your debt on the next one,
Sure.
as well as the income from the fourth one. So slowly but surely, you can still have small amount. For instance, if you've bought 3 over 5 years, you're going to have debt on the first one, debt on the second one, debt on the third. That's going to be reducing.
Yeah.
But against the goodwill element, we go back to goodwill of 70 or 80%.
Yeah.
There will be a margin, like equity on your house. There will be a margin on the first, second, and third business, which can be utilised to help you purchase the fourth business. And that could end up with you putting very little in yourself.
Sure. So the key is to, and obviously goodwill values have kind of gone up, as we know, plentiful over the last few years. So 70% of quite a big number is covered already, and I guess that makes it easier to buy and build for the right type of practice in the right type of location. Okay.
That's right, and especially if you're buying in a similar area and you're buying a similar practice, then that helps as well, because obviously you've still got to get around between the practices because you've got to have control.
Yeah.
And very often the banks, as you get to 4 or 5, and probably for your own good as well, they'll be looking for you to sort of put in place probably what we used to call an area manager or a senior practice manager, somebody to actually control the group. Because if you're a hands-on dentist, it is very hard to do all the paperwork as well, and so you need to keep the income up. But if you're doing paperwork, you're not keeping the income up, and if you're not in control, so if you haven't got someone looking after things for you, you can have a situation where the new practice does very well, but the old ones start to fall away very rapidly.
Sure.
So it's taking your eye off the ball in effect. And it's very important to make sure you've got the right. Again, we talked about the right team in setting it up. It's about having the right team, the receptionist, the practice managers, and everyone behind you, so that it allows you to build this strategy of getting a group together.
Okay, fantastic. Okay, cool, great. Should we move on? I've asked you too many questions already. Karen.
Right. Business considerations. I mean, most of you will know these if you own a business already, or even if you work in one as an associate. And they're not rocket science in themselves. I mean, location is very important. If you're near a station, it's really useful in London. Parking is a huge problem in the southeast and probably in every major town in this country. The reputation of the business when you're buying it. We want to talk about, the banks want to talk about competition, the premises appearance, and obviously the lease details. The lease details are very important when buying leasehold property. The banks will only lend you within the term of the lease. So if you go and buy an existing business and it's got a 5-year lease on it, they won't lend past 5 years. And I think everyone can see the reason for that, because obviously the lease could run out and you would have no business there. So very often when you buy a business, it's an appropriate time to renegotiate the lease at the same time and try and get a lease for 20, 25 years, therefore giving you the ability to go to the bank and get a 20-year mortgage, which will give you the ability to pay it down very slowly over a period. What I didn't mention on the mortgages is that many banks will allow you to repay more than you need if you wish to, and surprisingly a lot of people do. They will also allow you to make lump sum repayments on occasions throughout the year, and most of them do not charge any penalty for that. But again, if you go for a fixed rate, there would be a penalty, so therefore you have to structure your deal in the right way, and that's why it's important to get that right at the beginning. Realistic timescales: CQC registration, how long does it take to transfer CQC, and how long does it take to deal with them? And it can take, as we put on there, 6 to 9 months. I mean, I had one when I was at my last job. We had one that took 14 months. That was a record. But it's a long time, and what you need during that time, the banks will only give you an agreement normally for 3 months, and it has to be renewed. So every 3 months has to be renewed. You don't have to pay any more fees. There's no problem there, but it has to go through the process. So the business you're looking at has to be continuing at the same pace and the same rate of profit and everything else during that period. Okay.
Okay. Yeah. Fantastic. And then NHS contract. Well, a couple of questions I've just come to my mind. You've talked about.
Yeah.
You've got plenty of years of experience in financing practices or businesses. Okay. What are kind of some of the key mistakes that you've seen that come to mind? Any kind of big howlers or things not to do, especially when it comes to raising finance?
Right.
Where do you start?
I think, yeah, it's difficult. The first thing is honesty.
Yeah.
You've got to be honest about your position, because the worst thing you can do is borrow more than you can afford, and that just puts you in a bad position. So there's no point in that whatsoever. Okay. I think probably sometimes people try to buy what I suppose we could call it too big a business. You know, it's a big step to move from being an associate to being a principal and having your own business. But sometimes people will look at it and think, well, I'll have that one. That's making £1 million turn, has got a big NHS contract. They may not be able to make that step up. They may not be able to afford it. I think one of the things the banks look for and finance houses look for a lot, and this is something to bear in mind if you're an associate working in the business at the moment. When you move up to being a principal, you move up to running the business. So you are now responsible for the staff, the cleanliness of the place, the replacement of the equipment, changing the light bulbs, cleaning the floors. You know, that is your responsibility. I know you get somebody else to do it, but it's your responsibility. So it's quite good if you're looking to move up to be a principal and buy your own business. It's quite good to start taking on some of them duties as an associate, so that you get used to working a business in the right way, and you get used to the problems and staffing. I'm sure everyone has staffing, and they can be an issue, can be quite difficult. So it's important to start doing that work yourself, and it's important when you come to your application for a loan to stress what you do know and what you have done, because the banks look to that sometimes, especially when they're lending large amounts of money. They look to that and think, that's excellent, you've worked hard, you've tried to understand the business that you're in at the moment. That will hold you in good stead moving forward. So that's very important.
Okay. All right, very useful. So
what do the banks want? Well, they want what they call a deal pack, and this consists of all these things that are on this slide. And it's very important. Some of the stuff is fairly easy to get. If you're an associate already, you'll have associate accounts. If you've already got a business, you'll have practice accounts. They'll also need the practice accounts of the business you're applying for. They'll want to see 6 months of bank statements. If you've got a business already, they want to see the business statements, and they also want to see your personal statements. That's to make sure that you run your affairs in the correct manner. A CV is always a good thing, because it brings out things like where you trained, where you've worked previously, and again you can bring out this issue of having done more than just associate work, i.e. I worked with this guy and I looked after the staff at this practice, or I did the payroll, that sort of thing. And we also complete what are called personal and business profiles. This is quite a detailed form, but it gives both myself as a broker, and it obviously gives the banks a huge amount of information about the business and your own life. If you're buying a practice and you're going to change things, it's very important that you bring out what those changes are going to be. So, for instance, if you're buying a practice and the principal who's selling it to you is going to stay on for a period, the bank needs to understand that. And again, that can be very important that they stay on for a period to give their clients the comfort of because nobody likes change, so that it gives them a period during which they can get used to you being in the business. Also, if you're going to add another chair, are you going to bring in a hygienist? That sort of thing. So all these things have an impact on your income and your expenses, and it's important that you understand what you're going to do, so that someone who's putting together those figures, hopefully a healthcare accountant, can actually do a projection and build those in to show that the profits hopefully will increase and that the business will grow and it will change. So, you know, all these things are very important. It's about having a bit of focus about where you're going with the business. I've put drawings on there. It's always an interesting one. You need obviously to live, and it's important that at the outset we ensure that there are sufficient drawings in the business to maintain the way you want to live, and to make sure that you can pay your own personal mortgage and your car finance and anything else, as well as pay the bank back. So the bank will take quite a detailed look at drawings and your lifestyle. It will want an income and expenditure from you. It doesn't have to be minutely income and expenditure. I have seen them down to pennies. You don't need to be that detailed, but you need to put roughly what you spend each month on various items, so the bank can see where you have, let's say, a buffer. So very often, and what we find a lot in dentists is that dentists are often married to other dentists or doctors. So you put your spouse's income on there as well, and what it shows is that you have the ability, should anything go wrong in the practice, to actually look after it and yourself. So projections are very important, but they're based on what the changes you will make, and that business plan gives you something when you move in to have a look at in 6 months. Not supposed to be just put in a drawer. You're supposed to look at it in 6 months' time, gauge where you are against it with the use of your accountants, and work out, have your changes worked, and if not, what should you change again? Aaron?
Okay, yeah, one question I've got, Nigel, is from your experience, quite often people will buy a practice and they'll do quite successfully, but it's the personal life where the problems usually arise. So they have too big a mortgage, they've got they've got school fees to pay, they've got housing, all that type of stuff to fund. Do you find that's something that people need to knuckle down on further?
Yeah.
Get that right before they take on a big loan for a business.
Yeah, it's interesting. I mean, before I was working on the healthcare team, before I ran the healthcare team, I ran a team of managers called the Specialised Relationship Team, which was where customers were having issues. Now, we had a few dentists in there, and well, generally, I would say generally, but probably 100% of the time, those issues were caused by personal finances. They weren't caused by a problem in the business or anything else. It was caused by perhaps overspending, not thinking about their mortgage. Very often people have a mortgage which is on a reduced rate for 2 or 3 years, and then it ups quite rapidly, and they haven't built that into their plan. And those sort of things. Lifestyle is the very important thing at the outset, which is why the banks focus very heavily. When you're lending unsecured, you really need to know that someone's in charge of their personal finances, because they are the person who's responsible for repaying that debt.
Okay, all right, useful, very useful. Okay. Right.
So, other services. What else can you get from a bank? Well, asset finance. Everyone who's a dentist on this call will know that the chairs you use are really cheap. They cost a lot of money, and so does all the equipment. And because you need the right equipment to set up and make it look right and make it work correctly. Now, asset finance is available for some of those things. Some banks provide HR services, private banking and mortgages, and all these things we do as well as brokers of finance. We can obtain for you. For instance, today Aaron passed me a lead for one of the dentists that we have, and he's just putting in a new chair and cabinetry in one of his rooms, and we've agreed to finance with one of the asset-based lenders. But they will only do asset finance, and this is what you have to bear this in mind. This is why it's important when you're setting up a surgery. Asset finance is normally only over 5 years. so the repayments on it are quite steep. And obviously the reason for that is that it matches the wear and tear on the item, and most items are depreciated through the accounts over 5 years, but also do actually wear out and need to be replaced. So it's important to get some of these things in place. I mean, even down to, you know, the payment mechanism. You need a card machine, and these things need to be thought of. Because sometimes when you're buying an older practice, should we say, that you're gonna change and you're gonna upgrade and you're gonna do this and you're gonna do that, sometimes they haven't got these things in place, or they've got them in place, and you need to look at sometimes the rates that they're paying. Some of these card machines can be on very old rates. Generally, card suppliers, what they do is they charge quite heavily up front until you've got a sufficient turnover, and it brings it down. But what you have to do is you have to go back to them when you get that turnover. They don't tend to come to you and say, your turnover's gone up, therefore we're not going to charge you so much. So you need to be on board with that sort of thing.
Okay, all right, fantastic. Okay, I'll come back to that. So, actually, I've got a question here from someone out there saying, is the deposit paid on the loan after the transfer of the NHS contract? Do you understand that?
Deposit paid on the loan. The contract normally, it's a bit like buying a house. The contract is normally transferred on the day of purchase, so you don't pay for anything up front normally.
Yeah.
And your deposit, the bank loan, would be held eventually by your solicitor, like it is for a house purchase, and then paid over on the same day.
Okay. All right. Okay. Yeah, it makes sense. I've got another question for you, Nigel. Imagine you're a late 20s, early 30s person out there who wants to set up their own practice or buy a practice. Okay, what would be your 3 top tips around the financing side of things? What do they need to do? What should they have in place before they even consider doing this?
I would say the first thing is to get their personal finances in order.
Yeah.
So don't go the month before you want to buy a practice. Don't go and buy a Jag and put it on finance. Just think about things and make sure you've got, you know, I don't say you need to pare your finances back to the bare bones, but make sure that your finances are reasonable.
Okay.
So that they're not out of line with your lifestyle. That would be the first thing. The second thing is to do a bit of research and to make sure that what you're buying is well within your means. Now, one way of doing that is to have a chat with someone prior, because I mean we're going to do the boot camp in a couple of weeks' time in June, and we're going to have 28, 30 people there, I think it is, and they're going to talk to me about their finances, and I'm going to go through their own finances with them and explain to them how much they could borrow and how much they might need going forward. And that is quite important. So it's a bit like buying a house, really, and you know you've got to know what you can afford before you go out and start looking. So that's quite important.
Okay, one point there, you mentioned a house though. Do you find that banks are much more willing to lend to people who've got a house already or a mortgage already, a personal mortgage already, because they shows commitment to the person, to the bank, or manage their money better?
Well, it doesn't have to be with the bank you're with. And this is one of the things that is quite interesting. A lot of people go to their own bank, and if it's not a healthcare manager, they don't get anywhere. You can go to we can go to many banks, and you don't have to take your personal business with it. But yes, what the bank's looking for when you're lending to someone unsecured, and the word the banks use, and it's quite an old-fashioned word, is comfort. So what they're looking for is so they can feel comfortable lending you, possibly somewhere anywhere between £300,000 and £800,000 generally. So a lot of money, and they want to be comfortable that in the background you have an asset. It might not cover the loan, but you have an asset. So I suppose, if I was being blunt, what they're saying is that you haven't gone out and you haven't had a lifestyle where you've wasted your money.
Sure.
So what you've done is you've invested in a house, you've got a nice deposit saved, and you know you've been sensible with your life, and that's comfort for the bank, and that's where having your own house is quite useful. If you've got I mean, this is where we often have problems when we fill out personal profiles. Customers will leave off rental properties because they fear the bank will look to take a security over it, and that's not always the case. But what they will see is, well, you've got a rental property in the background, you're obviously quite astute, and you've been in business and you know what you're doing. So it's that comfort factor they look for all the time because they haven't got any security.
Yeah, and I think one thing to add here, Nigel, do you want to explain the process of if, let's say, a client came to us and they said, I need to raise some finance. Do you want to explain the process of how we work? I've kind of come on this a bit early, but just explain how we work, but then also how does that mean then you go to different banks, but then within a bank, let's say, then it has to go to a credit committee. Just want to explain that process, because I think it's quite important for people to understand how their applications are assessed.
Yeah, certainly, yeah. Now, I'll use an example we've had for someone come to us this week, which is quite good. The first thing to do is to understand your personal finances. So I would get you to fill in a personal profile. So you tell me about your assets, you tell me about the deposit you have, you tell me about what you're doing at the moment, what job you're doing. Then an income and expenditure form, so I can see that you're living within your means, and if you've saved a deposit, that will become apparent from your income and expenditure, because that's where it would have come from. It would come from the surplus income. It may be, however, that your parents are going to help you out, or family members. So that might be included as well. So we wouldn't need detailed information about them, but we would need to know where the deposit is coming from. So that's the first stage. The second stage is then to look at, if you're an associate, look at your accounts and check that you're making a profit, which I'm sure you are, because otherwise you wouldn't be able to save a deposit. But it's also to look then at the target business. So then we'll start to gather information on the target business. We look at the vital signs if it's an NHS, make sure it's trading well. We look at their accounts for the last 3 years to see generally how they're doing. Now, sometimes that can be over the last 3 years, for instance, the profit could actually have been falling away. Now, again, what we need to understand there is, why is that? And it may be that someone's moving towards retirement. There may have been sickness. There could be any number of problems, but as long as we understand why the profit has fallen away, that's fine. Generally, you see the profit being fairly stable, and in some cases rising. So we get that information through. We then do your business plan with you, and one of the accountants would come along and do your business plan, your projections, so we could actually see what changes you would make to the business, etc. And what you have to do is package all this up. Now, what you could do as a broker, you could just send all this information to a bank. It doesn't work very well if you do that, and some brokers do that. But what happens then is you just dump a load of information on someone. What I tend to do, and this is obviously I'm talking this from personal experience now, is I tend to write a screed for the bank, which basically outlines the deal. It details what you're trying to buy, what your experience is, and it tells them what the costs are, because I've already worked it all out, and what you can afford. Again, I've worked that out, and I do the basic calculations for them, so they can see on the first review of it that this is a deal that will work. What we also do at Samera then is make sure that we send it to the right people. We talked earlier about some banks only, let's use a private dentist as an example. It's easy. The maximum some banks will lend is 300,000. So it's pointless me sending a £450,000 loan request to that bank. So what you do is you select the banks that you know will do it. So you would, in that case, select banks that do goodwill purchases. Whereas in another case, if it was a very small practice, you only need to borrow 200,000. The ideal would be to send it to the bank that does a maximum of 300,000, because it fits in with their profile. Now, what we do is we send it to 1 or 2 banks so that we get an overview. Banks generally, at first, will review the proposition, and if it's well written and it's all the information is there, which it should be, they will come back fairly quickly with a general, yes, this looks good. We think we can do this. The rate would be around this figure, and the fees would be this, this, and this. So we can communicate with the client as to what the cost would be at that stage. Now, at that stage, there are 2 things we could do. We can ask for both banks to take it forward to their credit committees, or the customer can, in fact, say, well, I don't think I want to go with that bank, I want to go with that one, and we'll just put it to the one. Now, what all banks do, and they're all really the same, they have different systems, but they're all very much the same, is that the managers no longer have the power to lend money. So they have to complete a credit application. So hopefully they will use the wording that I've given them and expand on it a little bit with their own wording, and they will submit that to a credit committee. Now that is normally remote from them. You cannot speak to that credit committee as a client. They are remote. They only look at policies and they look at the information given to them. They will then make a decision on it, and if it's successful, they will send it back to the manager, who will come out to you with what is basically called a terms letter. So it's a head of terms in effect, and they will detail the terms. Now sometimes in those terms there will be what are called conditions of sanction. So if you're buying a freehold property, a very easy condition of sanction is that the property must be valued and it must come up to a certain value. That's a fairly standard. With dentists, there's a lot of conditions around locum insurance cover, your own personal insurance cover, sickness cover, all that sort of thing. And if you've got that already, that's fine. All you have to do is provide it, and it ticks those boxes for them. And as I say, normally with most banks and finance houses, that sanction lasts for 3 months. At the end of the 3 months, because I doubt you would have purchased your practice in that period, it has to be renewed. And it's a simple process for the managers to renew it. And if a year has passed, or if the end of a financial year has passed, they would seek the accounts for the business just to see that the business was performing satisfactorily. And that's really how it works. It can be, and what we tend to find is that the process is fairly quick, because if you put together the pack correctly and you detail the information. I mean, now obviously it's easier for me because I ran a healthcare team. If you know the questions, I mean, I used to work in credit many years ago, so you know the questions credit are going to ask. So if you can detail that in your first page, one pager that you do for the bank, you can detail the questions that they're going to focus on. Then you can actually make the relationship manager's job far easier. It makes the credit man's job far easier. Now, an interesting, and most people won't know this, but most credit people, when they get an application, get approximately 20 minutes to review it. That's all they get. Now, if you think I'm sending 3 years accounts, bank statements, profiles, business, profile, personal, your projections, your CV, it takes you probably 10 to 15 minutes to read all those, correctly. And then you read what the manager's put. So they haven't got a lot of time. So what is important when you're doing an application to a bank, and important that they get the application right. Again, what I said earlier about going to the right people. You make sure that they tick all the boxes for the credit people. You put them in what I used to call a happy frame of mind. So they get all the information they want. They tick away with it. Oh, that's good. That's good. That's good. And they get into almost a state of mind of looking at it and thinking, yeah, this is a good application. What they don't want is to be asking questions in the first paragraph, the second paragraph, the third paragraph. They're then going to come back with a huge amount of questions and not be very happy at all. So it's about pitching it right. And even with specialist teams, I found, and I still find, you need to pitch it to the right people within those teams, because some people are better than others. And it's giving it to the people who you know can do the deal for you and get it done and satisfy the customer.
Very useful to know. Okay, that's great. Nigel, kind of thorough understanding and explanation. Very thanks. Couple of more questions quickly as we go. One question is, if you don't have any assets, for example, a house, but been working as an associate for 5+ years, would banks be less keen to lend a large sum of money?
Yeah, the answer to that, if you want yes or no, is yes, but it doesn't stop them lending a large sum of money. Probably, if you haven't got a house, hopefully you have a large deposit because you haven't spent on a house, so that would help. It's like all these things, and this is why it's good to talk to people who understand these things, because rather than just go to a bank manager who hasn't got a clue about, because he might look at it and go, we haven't got a house, so no, you can't borrow any money. It doesn't work like that. It does work on the size of the debt. So when we say a large amount of money, it's quite hard to say what a large amount of money is. I mean, in dentistry, a large amount of money is over £1 million. So if you're borrowing 300,000 or 400,000, that's not considered to be a large amount of money. So you can do it without owning a house. In the southeast, it does come up quite a lot because obviously properties are expensive. If you're an associate, you very often aren't working in the area that you used to live in. So, for instance, if I use an example of one I've got on at the moment, originally they lived in Essex, they now work in central London. So they're renting in central London because obviously it's easier to get in and out of work. So it does happen, and the banks will look at it. And again, it's about the presentation of the application, and it's about focusing on their experience, what they've been doing, the amount of deposit they've got, and their income expenditure to show that they're leading the right lifestyle.
Okay, great. And then another kind of question, two questions which are kind of linked. One is about the pros and cons of setting up a squat relative to buying a practice. I guess I'm probably better positioned to answer that.
Yeah.
In terms of setting up squats, I've set up many squats over the years with my wife's meter, and I suppose the pros there are most definitely you're not paying for goodwill, and you can set it up as you want under a certain brand name in a certain type of location. The cons to that are, of course, there's no patients coming through the door. But if you've got a good system in place in terms of marketing, brand, you can build the goodwill up pretty quickly if you've got the right team in place and the right dentist in place and the right location choice. So there's pros and cons most definitely for both, and it depends on your attitude to risk, what you think would work for you. But certainly I'm a huge fan of setting up squats. However, there are some practices that I would buy if they were the right price in the right type of location and the right return was possible. And then the second question relating to this, and more specifically, how do the financing challenges differ between setting up a squat and buying an existing practice? Well, from my perspective, setting up a squat, the level of investment is considerably lower. To set up a squat, assuming it's a leasehold, you might spend anything between 150 to 250,000 pounds to do that. Now, whereas buying a practice, you may be able to buy a practice for that level, or it depends on what type of practice you want to open and what type of location, what type of look and feel, what type of dentistry you want to do. So buying a practice can vary so greatly from 100,000 up to millions of pounds. So whereas a squat, simple squat, decently done in a decent location where it's just rented, maybe anything between 150 to 200. So if you've got some money already, it should be relatively straightforward to borrow any remaining money that you would need. Am I right in saying that, Nigel?
Yeah, I think obviously a squat has the different issues because you haven't got the income stream. You haven't got you can't change things because you're changing everything.
Yeah.
So you can't say I've got a business that makes 100,000 a year, so I'm going to put a hygienist in, I'm going to put another chair and it's going to make 200,000. But the important thing probably is going back when we started this about things like location, parking, all these sort of things, the competition. These are all things that the banks will look at in more detail, great detail. I'm looking at one at the moment, and it's near a station. It's opposite a car park. There is a practice right across the road, but it's NHS and it's full. There's one down the road and it's NHS and it's full. And there's one 2 miles away, it's NHS and it's full. So as a location near a station, car park, and surrounded by practices that are full, it's ideal. It's a really good one. So that will sell through with the right the wording and bringing out the right positive points on it. If you're trying to open one and it's next door to somebody else and they've been there 10 years and they've still got capacity, that will obviously hurt your own business. So it is about picking the location. I think Arun would agree with me there, and where he's picked his over the years. They've been quite varied, but they've always been successful because they've managed to attract the right sort of people. So you've got to think about your plan a bit more, perhaps, with a squat.
Yeah, exactly. Okay, conscious of time, we need to wrap up shortly, but we'll just one other question there is: what is the advantage of or disadvantage of going with more than one finance broker, Nigel? That's one question that's come through.
Generally, you can't because you will sign a letter of engagement which precludes you from doing that. One of the reasons that brokers don't like people trying to do that is obviously they might go to the same bank with the same deal, and that just wastes everybody's time.
Exactly.
This is something. It's like when you're doing dental work and you offer someone a silver filling or a white filling. You get what you pay for in life. And if you employ the right broker, you will get your finance agreed, unless he comes back to you and says this is not a deal we can do. And you know, we recently turned one away, quite a big deal, and I sent out quite a long screed explaining to the prospective dentist why we couldn't do it. And he did in fact take it to another broker, and they were all, you know, very happy clappy at first, and then they couldn't do it either. So if it's not a doable deal, it's not a doable deal.
Yeah.
But what you don't want to be doing, it's not a question of setting brokers against each other because you're going to get a better result. And don't believe brokers who tell you. There are brokers out there who go, oh well, if you go through a broker, you get a better rate of interest. You do not. I've never known that in banks. Banks use a calculator to calculate interest. The banks I've worked for in the past, 2 or 3 banks I've worked for, there is no input field in that calculator for whether it's a broker deal or not. So it doesn't matter, you know, going to a broker will not necessarily get you a better rate of interest. However, if they've got a good relationship with the manager, so for instance, if you've supplied a manager with 10 deals that year, it may be possible for the broker, and has been on occasions for me, to negotiate a change in the arrangement fee or, in fact, a better rate. You can negotiate it afterwards. It's not automatic, but you need a good broker to do that for you.
Definitely. Okay, fantastic. Right, let's kind of wrap up. Just a quick thing. Obviously, you can hear Nigel's wealth of experience coming through on how to arrange finance for your business. Plenty to discuss. Okay, Nigel will be talking at our boot camp, which is in the 17th and 19th of June, and he'll be talking on financing and how to basically get the best deal for your financing. Okay, so if you want to know more about financing, plus everything else from marketing to equipment selection to everything else, you know where to come. Boot camp, please do book. Let us know. Let me move on. I think people have already asked questions already, but Nigel's contact details are there, and he's available to talk on the mobile or drop him an email in that respect. Okay, so one last question I've got through from the same individual, Nigel, about the brokerage thing. He's saying, for example, my accountant has suggested one broker, and I might be tempted to go to another broker linked, for example, to the practice agent or broker. What's your view on that, going to a broker linked to the agent who's selling it?
Well, we come across this because obviously, Samera, we have a practice sales. And what you need there is what we call in banking Chinese walls, so that, you know, I don't discuss with the practice if he's selling the practice. One of my colleagues is selling the practice. I keep the information I have regarding the purchaser away from him, and vice versa, because that's required. Because I'm working for the client and he's working for the seller, Correct. So we're working for 2 different people. He's obviously trying to get a good price for the seller, which you would expect. I'm obviously trying to get a good deal for the purchaser. So it's very important if they are connected to understand that, you know, there is no contact between the two. So Max Bazzacchini is our practice sales head of practice sales, and he will come to me and say, oh, so and so wants to buy this practice, wants to talk to you. So I've got that information. I will get the information regarding the seller, such as his accounts, his vital signs, practice information, that sort of thing, the brochure, off Max. But at that point, that's it. Max doesn't get any more communication, because now I'm working for the seller. Sorry, I'm working for the buyer. Apologies.
It's
working for the buyer.
Yeah.
So buyers and sellers all the time. But I'm working for the buyer. So it's important now that I only deal with the banks,
Sure.
and that we separate ourselves from the other people. Most brokers, a lot of brokers have practice sales within their brokerage, and it doesn't appear ever to be a major problem. And it's just important to make sure this isn't a case of me going to the seller and saying, oh, we can afford more. We never do anything like that. That's not what we do. So we work for individuals, and we work different sides of the curtain, in effect.
Sure. Okay. Well, there you go, everybody. Those are Nigel's contact details. If you're looking to finance anything, whether it's a new startup, acquisition of something, expanding your reach, these are his details. Please get in touch with Nigel. He's a busy man all over the place, meeting with clients, but if anyone can help raise finance, he can. I wish to say thank you to Nigel this evening for your time and sharing your experience and knowledge to everybody out there. And thank you for everybody else who listened in and watched tonight. There will be a recording available of this webinar, and that will be released in the next few days as well. Okay. Any final comments from you, Nigel?
No, just thank you everyone for listening, because I'm sure to me it's interesting, and I hope to you it is as well. I'm more than happy to answer any questions if you want to email me or you want to phone me. And I do understand if you want me to phone you, best thing is to email me with a time, because I know that you're busy, and I know that you can't drop everything and take your phone call to when you've got a client in the room. So I'm quite flexible on talking to people. I will come out and see you if I can, if it's reasonably local. I mean, obviously the north of Scotland isn't that local, but if it's local, I will try and come out and see you, because it does help me if I see you in your practice. And I will try when I can to go and see the target practice as well, because that really does help form a picture in your mind when you're writing the details down for the credit people.
Sure.
Thank you.
Thanks, guys. Good night, and look out for our next webinar, which will be soon. Thank you. Good night.